Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 2nd of August. RBA cuts rates to historic low but offers no easing bias. The Reserve Bank of Australia reduced its benchmark interest rate today by 25 basis points in line with market expectations. The bank noted that the prospects for growth and inflation would be improved by reducing rates and that the likelihood of lower rates intensifying risks in the housing market has diminished. Aussie dollar fell immediately on the decision but recovered all of its losses in the next couple of hours. Importantly, the RBA did not include an easing bias in its meeting statement or any form of forward guidance on the rate path. This may be a sign that the bank is reluctant to continue easing in the near term and prefers to pause for some time while it monitors the effects of its recent rate cuts. As a result, we see the risks surrounding Aussie dollar as tilted to the upside for a while, at least until further developments in the inflation outlook lead the bank to reconsider its stance. What's more, Australia's safe political environment, in combination with higher bond yields than most of its G10 counterparts, may provide further support to the Aussie. The next major risk event for Aussie traders is likely to be the release of the RBA's quarterly statement on monetary policy on Friday, as it will update the bank's economic growth and inflation projections. Oil prices fell sharply on Monday, with WTI trading briefly below the $40 per barrel area. Prices have been under pressure since early July, weighed on by signs that the market will take even longer to rebalance itself as major producers increase their output further. Even though we saw some global supply disruptions over the past months, such as reduced output from Canada and Nigeria, OPEC output has risen lately, boosted by increasing production from Iraq, Iran, and Saudi Arabia. In addition, expectations of Libyan output returning to the market and a continued increase in the number of active US oil rigs in recent weeks has helped prices to head even lower. The fundamentals suggest accelerating global production, with Iran expected to continue pumping more and more. With no signs of new supply disruptions, oil prices could see further downside. However, we would be careful of a relief bounce in the near term, as the continued plunge could tempt investors to cover some of their short positions. As for today, during the European Day, in Japan, the government is expected to announce the details of its highly anticipated fiscal stimulus package. We expect the reaction in the yen to depend primarily on the size of the package, as well as its duration. From the UK, we get the construction PMI for July. This will be the final piece of post-referendum data Bank of England policymakers will have access to before their meeting on Thursday. Thus, it will be closely watched. The preliminary manufacturing and services PMIs both plunged below expectations in July, with the manufacturing figure being revised even lower afterwards. The construction index is expected to follow suit and decline, something that could bring the pound under renewed selling interest. From the US, we get personal income and spending data for June. Personal income is forecast to have accelerated, while personal spending is expected to have slowed somewhat. We see some upside risks to the spending forecast, mainly due to the surge in retail sales for the month. We have only one speaker today, Dallas Fed President Robert Kaplan. Given his comments on Monday that a September rate hike is still very much on the table, if supported by data, we don't expect any major market reaction on a similar rhetoric. A large deviation from this view is needed to rock the boat. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.